could be your sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for a number of altcoins I have touched on in the past, but first off, here on this chart that we can currently see, I'm going to preface all this by going over what is seen here, the total 3 chart for the crypto market valuation. This is everything excluding Bitcoin and Ethereum, so about as altcoin as you could possibly get. Still includes Cardano, which isn't ideal, but this essentially represents the pure altcoin market as at least I personally view cryptocurrency and blockchain in general. I look at Bitcoin, Ethereum, and Cardano as kind of like the big 3. I don't particularly look at Ethereum and Cardano as at least pure altcoins. I would probably put them more in the realm of like quasi altcoins. But anyways, first off, I went over this chart for this arrow points right here, somewhere around the week that encompassed the 4th of September. So at this point, it's been around 2 to 3 months approximately, and the idea that I was painting here, we can see each of these highlights: turquoise, pink, and the yellow, also the red and the blue, but mainly for now, the turquoise, pink, and the yellow representing the bull runs, the bear runs, and the accumulation phases. Here with these text box right here, the bull runs, you can clearly see each of these have had 3 pivot points so far. That was already confirmed. The bear markets right here in pink each had 5 pivot points, and what are supposed the hypothesis or the thesis that I was making in the last time I went over this chart was that there's a good likelihood that where we were back in around September 4th, September 12th, roughly somewhere around 300 to 320 billion for the market valuation, that this could have very likely been the last and final pivot point or local low in this accumulation channel that we see right here. Back in the past, it was more kind of like an accumulation triangle, as you can see right here, where each of these little red highlights denote the deviation from the accumulation channel, the absolute low that the bear market set as it was in that accumulation period, generally just building up some momentum to then break towards the upside once it broke the accumulation channel or zone. And so far that is worked out perfectly, as we can clearly see here as I cycle on and off from the drawings to just the chart itself. We can see that indeed the conjecture or the thesis that I made was ended up happening, as I said. That's very nice to see. Currently, the accumulation channel, where the top was roughly 400 billion, has been broken. At this point, the market has wicked all the way up to approximately 475 billion. And I was just pointing out what is next. Either we're going to break down or we're going to break up. Clearly, as I already said, things have broken up here, and this very, very confluential, these pivot points have lined up exactly as they did in the past. So we are basically seeing, typically, I mean, obviously history doesn't repeat itself exactly. For the most part, the most precise way to say that is that history rhymes over time. It doesn't repeat exactly, but in the case we're seeing here, you can say that it is so far repeating exactly. You could say that the difference is the way that the bear market formed. Like obviously this yellow or this pink highlight up here for the most recent majority of the bear market was very clearly very different from the prior bear market. And then you can say the same thing for the accumulation phase as well, although the bull markets were roughly the same. Outside of that, looking here at the ASO, I've been going over the ASO indicator on the Bitcoin chart recently, and the 6 pivot points that is historically called the bull run, going back to basically all price action post $1,200 when Bitcoin hit that towards the end of 2013. So this is very good to see. If you look here at the RSI, this is basically painting the same picture that we see here on the price chart, but on the RSI is broken above the 786 on the channel. You can see going all the way back to right here. This was lining up with the breaking of the accumulation channel. If we go all the way back here, this was roughly towards the tail end of the first bull market that is on this chart. We come down here and we look at the MACD. We've broken the descending structure. We're just going sideways, oscillating around the 0 point. So far, we've seen a significant break back above that. I think things will likely continue, especially factoring in the way Bitcoin looks, the way Ethereum looks, Cardano, as I went over in the last video, the Bitcoin ETFs, even the Ethereum ETFs, having next year. If you look here at the RVI, we can see that just barely it has hit back around the 13th of November, just slightly pushed back above the uppermost towards the oversold or the high volatility territory. So best case scenario here, as I generally say, just want to see, as things go forward, we want to see this indicator just stay within this upper range, as you can see that it clearly did, as it was breaking the accumulation channel back here leading into the bull market. We look here at the Bollinger Bands most recently, going all the way back to the basically the end of May of this year, the Bollinger Bands up until around basically the end of October were as compressed as they have ever been in the entire history of this chart. And then lastly, we'll take a look here at the stock RSI. Generally, this is basically just want to see the stock RSI stay up here in this upper territory rather than this lower territory as it does during the bear markets and roughly around the first half of the accumulation periods or phases. So with this preface laid out here, it's going to basically I'm using this to set the sentiment for all of the altcoin analysis that I'm going to go over after this. Obviously, at the end of the day, not all altcoins are going to have well, it's not necessary that all altcoins are going to set new all-time highs, and it's not necessary that all altcoins will even enter a bull run. Some altcoins are going to die off. Some altcoins will enter a bull run, but they just won't set a new all-time high, which ultimately that's not a good thing either, and is showing the likelihood that this specific altcoin is going to basically be in a downtrend over a macro period of time rather than looking something like Bitcoin or Ethereum or even Cardano, where it's basically just continuing to go up over like decades periods of time and setting overall macro uptrends in that sense. So around, like I said, 475 billion right now is the wick high. There is a vector control zone encompassing a range of 595 to around 662 billion. So there's a likelihood that we could see, as it's broken out here, some movement up to this range, consolidate a little bit, come back up, squeak just above around $1 trillion, maybe come down for a brief retest, and then finally continue to go higher. In the last video, I went over the overall total crypto market valuation chart, and I gave the range of approximately 10 to 16 trillion for the entire crypto market cap. So taking that into account, and taking into account my current theoretical, according to my theory and how I view the structure of Bitcoin and the broader cryptocurrency market, I believe Bitcoin is going to top out generally sometime next year in 2025 within the range of 180,000 to at highest 250,000, but I think somewhere around 215 to 230,000 is more likely than pushing to 250,000. So taking that into account, a rough approximate value of Bitcoin's market value in that range is somewhere around approximately 4 trillion, give or take 500 billion. So, which gives the range of around 6 to 12 trillion for the total crypto market cap, excluding Bitcoin and Ethereum. Like I said, either sometime next year or in 2025, although my personal bias is that the upcoming all-time high for Bitcoin and the broader cryptocurrency market is going to have a rough alignment with the upcoming halving, deviating from the historical sentiment, the historical bullish sentiment that the prior three halvings have set so far. So getting that aside, here for XYO, I went over this recently, so this is going to be rather quick. Those of you familiar will remember this curved linear bear market resistance. Recently, XY has been behaving very well. I went over the reasons for why and why you could have predicted this move in the last video. But so far, we did close this candle, the last prior candle, above the curve linear resistance, close it above the 50 estimated moving average. The current candle is also still above the curve linear resistance and the 50 EMA. It's almost above the 50 EMA band, the purple cloud here. And it's also printing, currently it is a yellow vector candle, a high volume, or not high volume, an increasing volume vector candle, which is one of the reasons back down here when we got these first three that you could have predicted this pretty volume, this momentous move that XYO has seen recently. Now, when it comes to this being a yellow candle, in the grand scheme, in the big picture view, the macro view, this can be looked at as a good thing, especially because it's breaking curve linear macro resistance, the 50 EMA, etc. That this is going to be similar to these first three yellow vector candles printed down here, and it's going to continue to go higher. Although, if you kind of take things more into a small picture context and you kind of zoom in a little bit to, let's say, this kind of interval or segment of price, then you could say that there is likelihood for it to see some minor retracement back a little bit, somewhere into this black box. I'd have to say probably more towards the upper half of it, and then bounce back above and continue to go higher. Although, like I was saying, generally, the macro picture is going to hold more sway or more integrity in terms of its in a technical analysis sense, which is why the higher time frame charts are going to have a little bit more trustworthiness about them rather than lower time frame charts, say like an hour, 4 hour at highest, and lower than an hour, going down to the minute based charts. But overall, I would say that there's definitely room to see XYO retrace to as low as basically approximately half a penny, specifically at 0.004, to just kind of line up the 50% rule of thumb, or cover around half of this bigger black vector control zone right here. When it comes to the upside target, again, like I said, there's still room to move into around a penny to 2 pennies, 2.5 pennies at the highest, find some consolidation there, and then continue higher. And then obviously, like let's say we come up, do something like this, then we come up to around 8 cents, sit here for a little bit, and then jump up, similar to the picture I painted on the altcoin market value chart. Here for the XYO to Bitcoin chart, main thing I wanted to update and add was these time tools up here. We can see from the very beginning of this chart down to when Bitcoin started to break, it saw high volume candles. It was breaking the black resistance pattern structures I have on here. I was breaking the 50 EMA and the 50 EMA band. Happened within 826 days. Basically, that bear market lasted around 824 days, and then the next 2 days after those 824 was these high volume candles breaking resistance and bearish structures. And if we fast forward to recently, do the same thing from the first higher here and go out, we are the next candle after the current candle, which right now, being the weekly chart, only has 56 minutes left in it. So this next upcoming candle will line up with the 826 days once the next weekly candle, 7 days of that weekly candle has transpired. Now we can see that the prior weekly candle here broke above and closed above this black resistance. Looking here at this more as kind of a very elongated falling wedge or falling triangle pattern. Unfortunately, it didn't end up closing above the 50 EMA. That would have been really a better case scenario to see. And the current candle also doesn't look too strong as well. So really, given that there's only 55 minutes left, this candle is likely going to close like this. And if I had to guess, a very small bodied candle is going to open up next, and it could likely end up printing a small body with high wicks, similar to example like this candle right here in this area, or something like this. And we'll see that retracement that I was mentioning on the USD pair down to maybe, like in general, this black vector zone, which is going to probably roughly line up with around, like I said, approximately half a penny, pushing 0.004, and then bounce back up maybe around the 50, or not the 50, but the 200 estimated moving average, then move up here a little bit, and then continue ultimately to go higher. As I was saying in the last video, just to reiterate real quickly, I think 50 cents is beyond reasonable for XYO to hit at this point. But when it comes to using data and lines of reasoning to deduce projections and price targets, $1 to $2 and $4.50 is $6.50. That would be the lower bound and the higher bound that I have. But like I said, I think 50 cents is beyond reasonable, and perhaps even could look at it as at least inevitable at this point. It's so here for Phantom, we can see this macro triangle structure right here with this support going all the way back to February 2021. The bear market resistance recently has broken out of it. The current candle is printing a yellow vector candle, an increasing volume candle. So similar to what I was painting for XYO on the USD pair. In the grand scheme right here, this yellow vector candle is printed in the accumulation zone, the range of lows. But when you zoom in here, you kind of zoom in a shorter interval, shorter period of time, let's say somewhere right around here, there's definitely room for this to see a short-term retracement, maybe back down to the resistance that it's broken out of to finally confirm that as support and then bounce back up, also halfway into the lower vector zone. You can see that there was right here a yellow vector candle. When zoomed in, this was printed in the highs, which is why it went down. But ultimately, if you zoom out, realistically, what this yellow vector candle right here is saying is that, at least this is the way that I personally look at it, is that this rough entire zone right here in yellow is the accumulation period. This is the period where you should have started basically, in the best case scenario, DCAing into just whenever you can buy. Maybe you wanted to wait for, to get down more. So in this area right here, where the double bottom was actually set in order to get the best buy-in overall. Which this generally also kind of just lines up with Bitcoin. Bitcoin has been, I don't have it put up on here, but Bitcoin on the weekly chart has printed 8 weekly candles in a row. The last time that happened goes all the way back to the 2014 and 2015 bull market. And then Bitcoin saw 40% retracement. If Bitcoin sees a 40% retracement from where it is right now, it's going to bring it down to approximately 26,000. I don't think that's too likely at this point. I think if, like I said in the last video, if Bitcoin comes down 30K, maybe some wicks down to 29, 28.5 at lowest is definitely viable. But at this point, I'd say somewhere more around 40 to around 32, 33K is what is more likely, as I said in the last video. Now, each of these blue arrows you'll see here, so as you see here on the Phantom chart, and you'll see on all the subsequent altcoin charts, this was the last time I went over these coins, which was in the month of May, more towards the end of May of this year. So all these price targets going to be updated. Some of them were a little bit lower because I came to a conclusion that I was kind of bobbing on in terms of my theory and the model that I apply to Bitcoin, and then I apply to altcoins to extrapolate into the future to give some sort of range where they could possibly top out at. So given that I think, according to the structure of what Bitcoin's at in its cycle, being in phase 1, heading into what is the third iteration of what is commonly known as the super cycle, the most prominent one being what happened from around 2012 to 2013 when Bitcoin hit $1,200. So I think we're going to see a move similar in percentage gains to this area of price right here. Now, there's still definitely room that the altcoins will have that one last jump like it did, but due to some intricacies of, again, my phase cycle theory, which I'm not going to dive in too much right now, I don't think that's what's most likely. So let's say that this portion of price action follows in suit right here. That gives us the price ranges of a lower bound being $50 to $100, and then an upper bound being $180 to $360. Now the $180 to $360 is what lines up if Bitcoin sees this final kind of impulse towards the upside. But if it just sees this move right here, then it would only hit around $500 to $100 now. As I was saying previously, I was saying could possibly go up as much as 200,000%, because that's what it did last time around. That's what falls in equivalence to, again, my theory. Now, if it just goes to 50 to 100, that's looking at 29,000% up to 56,000%. That is still definitely one of the better movers, even in comparison to the last bull market, and definitely in this upcoming bull market, I think will be one of the better movers as well. So when it comes to these vector control zones, the biggest one right now sits at 66 cents up to $1.23. So again, really all these are going to have very similar ideas drawn. I think it's likely we could come up, consolidate here, move up, consolidate here for a bit, and then continue towards these highs. Or it could do something like this, then have a more drastic drop and consolidate and then come up, do something like this. I mean, there's plenty of patterns and ways and routes that it could take, but these are definitely, I would say, like I said, 66 cents to around $1.23. And then there's a very small vector zone basically at the all-time highs, roughly to around 264 to 272. If I took that entire candle that this black vector zone is being referenced to, then it's $3.40 to $1.80. We look here at MATIC. We can see each of these bear market resistance zones. We've broken out of this first one right here. Basically had a double bottom on it right here, bounced up, printed a high or increasing volume vector, yellow vector candle right here. And now we are bumping the head the price right here on this upper resistance zone. So breaking basically $1 at this point, I think, is going to be very pivotal. And then there's clearly room, as I've been saying, to find some consolidation with this orange box and then finally break up, maybe come back down and then shoot towards the all-time high range that I projected, somewhere around $63 to $183 from the absolute low to the lower bound of that range. It's going to be roughly approximately 19,000%. To the upper bound, it's going to be approximately 54,000%. So again, this is one of the better movers, similar to, not as good as Phantom did last time around, but definitely on par, especially if Phantom doesn't move as high as it did, as I was saying. And again, like I said, which is going to apply to all these charts, if Bitcoin sees a retracement down to approximately 40,000, maybe as low as 30,000, then we could definitely see Phantom and other altcoins come down to their vector zones that I've been pointing out. I don't think this one down here is too viable at this point. I'd say probably more down to around 60 cents. Also lining up with this 200 EMA at around 66 cents is more likely at this point. Which percentage-wise from the recent local top to, let's say, lowest 63, 62, that's going to be a 36% move to the downside. Like I was saying, Bitcoin in its bull markets, and I said this in the last video, in Bitcoin bull markets going back in its history, excluding the March crash, because it wasn't, structurally speaking, it wasn't in a bull market just yet, leading into the March crash, but in Bitcoin bull markets, 20 to 40% are typically, that's the healthy range for drawdowns or retracements in bull markets. Anything over 40% is signaling that you're heading into or already in a bear market. So that definitely could possibly happen here for Phantom. Then ultimately, obviously, like I said, Bitcoin would be leading all of that. Here for Dogecoin, very similar here to Phantom in the way that this breakout is looking down here at the bottom of this triangle pattern that represents the accumulation range and the lows down here. So like I said, we could see some retracement, maybe down to roughly around 6.5 cents again. If not, then it would continue to go up. Right now, 12, 13, 14 cents is pivotal. See break. And then heading into this orange range of around 33 down to 20 cents is going to be, I think, important, likely. And then heading into the lower bound right here, starting at $1 up to around $3. So I think lower bound, obviously, for heading into the top of the prior bull market, this entire bear market, Dogecoin to $1 at this point has been so psychologically embedded into many people's minds that invest in a Dogecoin, that are in crypto in general. I think $1 at this point is almost borderline inevitable. I also think it's insanely reasonable as well. It's really not that much of a gain. If Dogecoin just goes to $1, it's only a 2,000% move. That's literally nothing. If it does that, then it would be one of the worst movers as well. That's just not really much especially in the crypto space. Now, I think that it is possible to see Dogecoin go as high as $24, $25, $26. If it starts pushing 30 to 35, then it would be worth more than Bitcoin in valuation. I don't think that's, I'm not going to say it's impossible, but I don't think it's, I think it's highly unlikely and definitely not most likely. Now, like I said, I don't think it's impossible. I think if it were to happen and Dogecoin were to overextend higher than I think most likely, up to around $30 to $35, then it would very, very briefly eclipse how much Bitcoin is worth. But like I said, I don't really think that's just too feasible in really the big picture of things. So moving into here for JASMY. Now, as I head into these other altcoins, all of these have basically the same. I mentioned the price targets, the values where they could go. Again, I think these price ranges will be met for altcoins, Bitcoin generally, sometime next year, 2025. But somewhere around March to around September of next year, I think is what is most likely in my personal opinion, although that could be wrong. And really everything I'm going in this video could end up not happening at the end of the day, because obviously I don't know what's going to happen. But anyways, so if you look here at JASMY, again, we'll see a similar curvilinear resistance as I have shown on XYO. Has not broken out yet. It's been bumping its head, the price has, on the curvilinear resistance. So whenever this gets broken, whether or not it comes down a little bit more into this vector zone right here, whenever it gets broken, I think around 1.3 pennies to basically 4 pennies, 4 cents, there's likely to find some consolidation maybe in this area for a little bit, and then come up to maybe this and find rejection and just break back above it and do something like that. But what is most striking for this update that I have here is this fractal pattern right here. This I took from Cardano. You can see again curvilinear resistance. You can see the fractal pattern right here. You can see the actual price action for Cardano right here. And then you take a look at JASMY, and then if I bring it down, it's almost verbatim the exact same price action, which I find insanely interesting, which could be a reason to believe that we're going to, over the next month, the next 2 weeks, pushing month and a half, 2 months at the longest, that we could see, given this fractal confluence, see JASMY do something similar that Cardano has done here more recently, and see JASMY push all the way up to the lower portion of this first yellow zone, somewhere above the 50 EMA turquoise moving average, somewhere around a penny up to maybe 2 pennies. Again, seeing also some similarities to where the next zone that I think XYO could go to. When it comes to the all-time highs for JASMY, I don't really know where it's going to go. It does not have enough price data. It does not go back to at least March of 2020 in order for me to apply the model I use for Bitcoin and then use that same model and apply it to the altcoins, because at the end of the day, if you look at a number of altcoins and then compare them to Bitcoin, within the temporal lens, like looking at it, how the coins move in time, it's all really roughly happening in roughly the same time. So here for TRIAS, this coin has been doing phenomenally well, better than most coins. And if we go back here to MATIC typically has bullish behavior that's a lot more better typically than a lot of other altcoins, despite this last leg it had down right here. But TRIAS has been going up since October of last year and has not seen a major retracement since then. It's just been slowly and gradually building upwards. What I find interesting here is how compressed the 50 EMA band is. I think there's a lot of pressure that's been built up here in this bear to bull transition. The ASO has crossed recently as well, which really, that applies to all the other coins I've gone over as well. But when it comes to continuing to move up from here, the next zone I think is possible to find some sort of consolidation retracement. It's around $5.75 to roughly $10. If if TRIAS were to drop down, if it were to have a drawdown, because it's been behaving, I would say, disproportionately well compared to a lot of other altcoins, I would definitely say that there's a likelihood that it could see a quick drop down, maybe even to this vector zone down here to $1.75. Although that's definitely not necessary, and I'm not saying by any means that that's most likely, but it's definitely possible. You could also have just a drawdown back towards the lower bound of the 50 EMA band, similar to how it's basically done right here, somewhere along the 50 EMA as well, going all the way back to February, roughly the very beginning of this year. Again, this is another coin that does not have enough data, so I don't have any idea where it's going to go. And this is really going to be, all these coins that don't have enough data is going to be a case-by-case basis, and really you're going to have to use things like the RSI, the stock RSI, MACD, other indicators to really tell when this is reaching its highly oversold territories. But here for the RSI, you can see throughout this entire slow gradual buildup that it's been oscillating around the midpoint at approximately 50, 57 on the RSI, and which you can just look at as bull markets are characterized by action above here, bear markets are characterized by action above here, and then bear to bull transitions are characterized by basically being in a neutral or a gray zone in the middle of the RSI. So here is the TRIAS to Bitcoin chart. As you can see, this is very clear, this important trend line that goes all the way back to the candle closed low, March, halfway into March of 2021. There was a bounce found in October of last year, and now the current candle and the prior two candles have wicked down to this trend as a support as well. So best case scenario, there would bounce would be seen here, and it would continue to go higher. Although Bitcoin sees a pretty drastic drawdown, even if it's just to like 45 to 40K, then I think that there's definitely likelihood that this TRIAS to Bitcoin pair could deviate a little bit below this into the vector zone, and then at some point, probably more so quickly rather than slow, break back above that support. Here for CRU or crust. So the last time I went over this, it had not broken out of this descending macro resistance. It broke out of it basically at the end of October. And also that's when it found the support along it, and has seen a pretty good move so far. At this point, it's been 225%. It is wicking, has wicked up to the 50 EMA. There's this black vector zone down here that could represent an area of retracement, 68 to 78 cents if Bitcoin goes down. Bitcoin really, even Bitcoin doesn't even necessarily have to go down. Bitcoin could go up, and some of these altcoins could drop as well. I mean, that could also be a scenario that plays out. So when it comes to clearly right here, breaking above $2.20, $2.30, it's going to be important. Once it starts to show strength above that, then I think it could move up to around $3.42, up to $6.80. Once it breaks through that, then I think it can move up to $26 to $55 once it solidifies strength there. Then I think it could then continue to move above the all-time highs at around $180. Again, so this is not one that I don't know, can't apply my theory to it, so I don't know, again, I don't know where this one's going to go in the grand scheme of things. So here for SCU coin, you see here this ascending white zone. This has been a very clear, almost crux of the price action, where you can see insane resistance was found right here as this coin was heading towards its lows. Once it finally broke above it, that's when the major impulse of the bull run, the prior bull run, began. It then had this short period distribution phase where it was going sideways within the highs. And then this point right here, when it broke below, that was really this would line up halfway into the bear market if you look at the bear market being this entire structure right here. And then the rejection was found here, came down. So far, been behaving very well from the lows to the highs. So far, it's moved similar to the prior, some of the prior coins, around 250, approximately 250%. It's already closed above multiple candles above the 50 EMA, the 50 EMA band. The current candle is just right above the 200 EMA. So closing above that will be great to see. If it sees some drawdowns, there's a range around 0.004 to 0.005. And then below that, there's a range of, again, roughly 0.004 all the way down to 0.003. Although around, let's see, 35 to 40% lines up with going down to 0.046, which, like I said, 20 to 40%. That's something that really just applies to Bitcoin. So it's not really too valuable to use for an altcoin, but it is some sort of reference frame that can be used. So once this upper vector zone right here at around 0.008 to basically 0.008 to 0.009, just shy of 1 cent, I think that it's likely that it could see a very quick shoot all the way up to as high as this range right here, which we see the white ascending zone and the vector zone denoting this area right here is important, although it could do something along these lines and then come up a little bit later and then do something like this. The all-time high projection that I see here for CA coin is most likely is 8 cents to 18 cents. Again, either sometime next year, 2025, or what I think is more likely sometime around the halving for Bitcoin next year. Overall, this is going to be from low to high, upper bound 8.3 thousand% move, lower bound 3.8 thousand% move. That's not terrible, but it's definitely not in the caliber of the best altcoins and the best movers in general in this space. This is kind of like a medium and intermediate in between like small gains and big gains overall. Here for DGB, Digibyte. This is, and so this coin and the next coin I'm going to go over, Algorand. The reason why these two are the last on the list is because I think these two have looked the worst out of all of them. Recently, a lot of altcoins and Bitcoin obviously have been performing very well, although you can clearly see here, zooming in, this short-term impulse that is seen has basically been completely, with the wicks at least, has been completely wiped out. The candles obviously have not gone down that far. So this is really already seen, like, so if Bitcoin were to see a pretty sizable retracement, like 20-40% soon, then there's a likelihood that DGB goes even lower again than it already has, or maybe it just roughly retests the lows somewhere like this. Right now, it needs to see a close above the 50 EMA. It literally was almost precisely rejected right here back during the week of the 20th of November with this major wick showing really not too strong of buying pressure in order for it to actually, you know, have the body of the candle close above the 50 EMA or even above the 50 EMA band at approximately 1 penny. So depending upon what happens, whether or not it goes down, Bitcoin goes down, whatever, that's it. The next area to look out for is going to be somewhere around a penny and a half to 2 pennies, roughly lining up the 200 EMA white estimated moving average. And then above that, there is a small vector zone at around 3.5 pennies. So we could see something along these lines right here. And then finally come up to this high zone, if this is indeed even going to enter a bull market that sets new highs. Maybe it comes up and gets rejected somewhere with respect to back here, sets a double top, and then comes down and continues to go even farther lower than it has in the past during the next crypto bull market. So when it comes to the high projection, I think 25 to 68 cents represents the lower and the upper bound. That is with reference to how it behaved from March of 2020 all the way to August, and you can see the all-time high. This right here would represent the upper bound, and then the lower bound represents back here in August of 2020, or it might be right here in August of 2021. I don't actually particularly remember, but nonetheless, the range, like I said, 25 to 68 cents, although because I don't personally think this coin's been, like, it's been going sideways since 2017. It barely set a new all-time high recently. It just barely squeaked out of not going lower than it did back during March of 2020. So, I mean, it definitely, again, could just come straight up to the all-time highs and continue to go sideways for the next, I mean, like the rest of this decade, for the next 7 to 10 years, leading into the early 2030s. Or it could go up to this range I mentioned. Or it could not have a bull run at all. Maybe this coin's going to die out, like I was mentioning earlier on in the video. But so far, it is good that it has seen this resistance get broken, but it still has a lot of room to go and definitely has not been behaving as well as a lot of other altcoins. So here for Algorand, now I think this one is by far the worst, one of the worst ones I've looked at. This has literally only been in a downtrend so far. According to my phase cycle theory and the projection that it deduces, I don't think it's going to set a new all-time high. I think it's only going to come up to around, is most likely 80 cents to $1.30. Now at the end of the day, it could definitely shoot far higher than the $3 all-time, well, than the $3 to $4 all-time high that it has so far. Perhaps, like for example, why it didn't drastically break above the area back here in June of 2019, why it didn't break above that area leading into October, November 2021, and then it's had this bear market that went lower than it did back in March of 2020. Perhaps Algorand's going to compensate for this terrible action, and it's just going to have an absolutely insane bull market to some really high values. It's obviously possible. I don't think it's highly likely or even fairly likely at the end of the day. For some other context, Algorand is a coin that Gary Gensler has talked about and kind of shilled, if you will, in the past, and he's gotten a lot of flack for it because it just looks terrible. And being somebody who's a part of the SEC and has a lot of power within the economic and financial realm, certainly kind of weird to see him shill or advertise basically a coin that has performed and looked this bad over the last number of years. So right now the 50 EMA sits at basically 20 cents. Seeing Algorand close best case scenario, the current weekly candle or the next few weekly candles above that will then add further confirmation that it's going to continue going higher and not see a drawdown. So if it does see a drawdown, then somewhere down to around, I would say 12 at lowest, 10 cents is likely. That is also going to roughly correlate with, that would move down to at lowest 54, at highest 47, but let's say, 40% moves down to 13.5 cents. So that's definitely a good likelihood on the table, but like I said, it's not absolutely necessary by any means. This vector zone right here sits at 32, 36 cents. There's a small one right here sitting at 64 to let's say 65 to 70 cents. But enlarge it a little bit and make it, with respect to the body of the candle back here, around 57 to 70 cents. The 200 EMA sits right now at around 50 cents. 50 cents just being a nice psychological value. So we could see something like this. The move up, but this upper black vector zone is basically right at the all-time high, so I wouldn't really see much. It could also get rejected right here at around 60 to 70 cents as well, leading into next year, perhaps as late as 2025, depending upon how the upcoming bull market unfolds over the next year or two. But that was all that I was going to go over and talk about in this video, so hopefully you enjoy it again. None of this is meant to be financial advice. None of these are absolute conclusions, and none of the analysis I went over in this video by any means is concrete and proof. And really all this is meant to be some sort of educational information. Perhaps you can learn something from, get some insights, etc., things along those lines and whatnot. But all of that being said and everything gone over, I hope you all have a blessed day.
Ooh, I regret now, won't I see you forever, start to